All right, guys, welcome back. So I'm lucky enough to have a guest with us today, Mr. Jeff Ross, or Dr. Jeff Ross, I should say. So Jeff, you and I met inside of some spaces on Twitter that were Bitcoin related, and I really enjoyed everything that you had to say. And so I wanted you to bring you on to pick your brain a little bit and share some of what you were discussing with the audience and dig into some other stuff. So how you doing, man? Thanks for coming on.
I'm doing great, Dallas. Thanks for having me. It's great to meet you on Spaces and now meet you in video, live in video.
Yeah, dude. So we
Zoom
got absolutely. So we got a bunch of things Bitcoin related I want to get to. But I think I want to maybe, start initially and kind of just get your assessment of, where are we in the market right now? Where do you think we are? I know nobody has a crystal ball, but just curious your perspective on, where we are. And then obviously after that, I want to kind of segue, where you think we're going, kind of mid and longer term.
Sure. So first, my standard disclaimer, I'm a fund manager and I have an RIA. I run separately managed accounts through a business called Vailshire Capital Management. So standard disclaimer, this is not individual investment advice. This is just my opinion. These are just my guesses. So this is not individual investment advice. Got that out of the way. All right. So where are we? I think we are, history doesn't repeat, but it often rhymes, as I believe it's Mark Twain who said that. So I think we are in a similar situation to 2013. And I've actually been expecting this for about a year now, that we would have this sort of first peak or a pseudo peak or a false peak in early 2021. And then a pullback where people are declaring that the bull market is over and dead and we're going, to zero or somewhere just above zero. 5,000, I've heard 3,000, 10,000. Peter Brandt, who's a friend of mine, he's a big guy in the TA space. He's been calling, I believe, in the low 20,000s for a low. So I think those are all possible, but I think they're all very unlikely. I think we had the pullback, and I think actually that 30,000 was basically the bottom. And we hit that, which was great. And it was painful, but it was good and healthy, I think. And it was a healthy reset. So I think that we're going to have similar to 2013 in the second half of 2013. After it pulled back over 50%, it basically went sideways for about 2 to 3 months. And then from October through December of 2013, it went up 10x. And so I actually think we're going to have a similar situation to that. And I think it's going to just melt people's faces off. My target since 2019 for this cycle for Bitcoin was 400,000 to 500,000. And I think it's still possible we get there by the end of 2021 or possibly into early 2022.
Oof, I like that. That gets me excited.
Yeah.
So from here, right? I mean, where are we at today? What, 36, 37? I forget what it was the last time I looked. Because that, yeah. I mean, if we're 9-10x from here, right? That's, mid threes. I think similar too, man. I mean, and it's almost always the case, right? The lows you'll hit on pullbacks are oftentimes, a bit lower than people want to admit sometimes. And then the highs are much higher than people will expect. And that's kind of almost always seems to be what plays out. Okay. Yeah. And I think the one thing for anybody listening, I mean, if it's not obvious that, I talk about here on the channel, I've heard you talk about, and everyone seems to really kind of grasp what's going on, is, what are the fundamentals, right? We talked about this, right? I mean, the money printing just being, absolutely rampant, things kind of not seen before, at least in the US. I mean, other countries have had their bouts where they're just having, insane amounts of money printing relative to kind of money supply. And so I would love your thoughts on, I brought up in the space just sort of like M1, M2, M3 money supply and kind of anything you want to touch on there and elaborate for people. Because I think people don't quite understand, right, that I think 39% of all of the US money that existed was printed in the last year. I think Mark Yusko said that. And globally, I think it was Dan Held that said like $25 trillion was printed globally, right? And I think a lot of people, a friend of mine, the people who are calling like 3 to 5K is what Bitcoin's going to hit, they're looking at like the .com bubble as a result of that. And I just don't think that they're similar or comparable in that way, right? Because that was a US based market. Bitcoin's global. And, look at the money supply difference of kind of the available money that could run into these markets. I mean, we have so much more money in circulation than we did in 2000. So what are your thoughts on that?
Oh man, I have a million thoughts and I could go in a million directions, but So I'll try to, you can rein me in if we're getting too far off track here. But so first of all, I think the central banks have painted themselves into a corner. We're at the end stages of a very long Keynesian economic experiment. And so the experiment is you get people to invest by off of a credit-based system. GDP is 70% consumer-based, consumption-based, and so the whole goal of the Federal Reserve these days, even though they have their other mandates that they talk about, what they really want Americans to do is spend money, and so they do everything they can to make it easy to do so. And we're at, I think, again, the end stages. Borrowing rates are close to zero, interest rates are close to zero. Cash is everywhere. We're just flush with cash, and debt is just completely maxed out, and it's higher than it's ever been, and it's going higher. And so I think the central banks have painted themselves into a corner where the only thing they can do is do what they've been doing, which is just print more and more and more money. And so, as you say, just in the last year alone, at one point, year over year, we peaked at, I think, 27% increase in the M2 money supply. That's actually decelerated and is now down to, I think, 18% was the most recent number. That is still massive. It's a massive increase in the supply. And so I believe it's Raoul Pal actually that first put out these charts, and that were fantastic, basically looking at the stock market in terms of M2 money supply. And what those charts clearly show is that after the crash of 2008, we never recovered. Stocks went up, and then they crashed down, and then the Fed started printing money. And since then, literally since 2008, 2009, stocks have been completely flat in terms of the money printing. And so what that means is, even though your brokerage accounts are showing gains, you've probably had 100%, 200% profits over the last 10, 12 years in your stocks, it's all artificial. It all comes at the expense of loss of purchasing power. So even though you have more dollars, those dollars are worth commensurately less. And so your standard of living has stayed the same. And that's if you own stocks. Now, if you're one of the poor plebs who doesn't have stocks, a huge portfolio, or, stocks, bonds, real estate, whatever, all you've noticed is that cost of living has increased and your standard of living has decreased. So those are the consequences of what the Federal Reserve policies are doing. They're actually ruining quality of life by depreciating the value of the currency. And that's across the board, across all major countries. The US is just one, and we're the largest. So what can they do? Nothing, honestly, right? I mean, I think we're in the end stages. This generally ends very poorly. I think the 2020s are going to be a decade of tumultuousness, of volatility. I think it will be similar as far as investment terms. It will be similar to the 1970s, where basically from the late 60s to the early 80s, the stock market did this, but ended up at the same rate or slightly lower than it was in the late 60s. Bonds were similar. Inflation was rising. Interest rates were rising. So bond prices were falling. So you lost money in the stock market. You for sure lost money in the bond market. And the only way to make money was through alternative assets like gold. Commodities did well. Some real estate things, emerging market kind of things, those did well. So I think we're kind of in a similar setup for this decade. The traditional Vanguard, index fund, 60-40 stock bonds, those people, and that's the majority of American retirees, they're going to get just hammered this next decade, and it's going to be painful. And they're going to wake up in the year 2032, and they're going to be like, I have no more money than I did 12 years ago. Like, this blows. I thought I was going to retire now, and I'm no further along than I was 12 years ago. So,
Man, yeah.
No, I mean, I love that. Keep going. Where we start.
Yeah, if you have more you want to add.
So what's the solution, right? And I say this on Spaces and on Clubhouse all the time, that if Bitcoin didn't exist, I would be depressed and angry. But Bitcoin does exist, right? I mean, it was created for such a time as this kind of philosophy. I mean, we would be totally screwed without Bitcoin right now. I would probably be pushing people into gold and commodities and emerging markets, and we would do okay among my Vailshire accounts and my clients and things like that. But Bitcoin is the much better alternative, and it's because it is literally the antithesis of central bank fiat currencies. Those can be printed to infinity, as Neil Kashkari said famously about a year ago. It can be literally printed to infinity, which means that the value of each individual unit mathematically goes to zero over time, mathematically. Bitcoin is the exact opposite. It can never be printed more than 21 million. It's a perfectly scarce digital asset. So mathematically, the value of each individual unit is trending towards infinity. It won't hit infinity. I understand that. People get on my case. I'm not saying Bitcoin will be worth infinity dollars someday, but it's trending up, and it should basically never stop, is the way I look at it. And so it's the perfect release valve to this crazy central bank system we're in.
Yeah, and in many ways, infinity might just mean, you know, most things get repriced in Bitcoin, right? I mean, that, and
Yep.
then that's the value system in which things are derived, and per Bitcoin so high, everything becomes Satoshi based. I mean, a lot of people think that that's obviously where things are going eventually, and probably makes sense once Bitcoin gets to you know, an even more ludicrous price.
Yes.
Love that, dude. That was great. Okay. And so what do you think about an argument? I'm not saying this is my argument, but I think some people may say, kind of like the modern monetary theory types, that you know, if you're looking at debt relative to GDP, you know, yes, it's bad. Sure, we're printing money, but look at Japan. Japan's is much worse than the U.S. and they're fine right now. So why, you know, why do we think that if we're at a lower, let's say, debt to GDP, that it's more significant per se? Do you have any thoughts on that argument? I've heard that from some people.
Yeah, well, again, I have a ton of thoughts on that too. So first of all, do we really want to be like Japan, right? I mean, Japan basically stopped growing in the late 90s, and they've been slowly dying ever since. Metaphorically, and I mean, sincerely, their population growth has stalled out. The culture is kind of dying out. Their stock market hasn't, you know, achieved the highs that they did. I think it was way back in 1990 or 91 or something like that. They have no growth, so that takes away the vitality of a country. There's no not a lot of innovation happening there anymore. It's just a completely different country. So that would be my first thing, is why in the world would we want to be like Japan? No offense to Japanese. I love Japanese people and culture. I used to study
Yeah, I also
Japanese.
do want to visit Japan.
Yeah, it's cool. I studied the language for a year. Anyways,
Okay, cool.
why is having too much debt bad?
Yeah.
Because basically that you're stealing from the future for current benefit and current growth, and you're stifling your future. So we're wrecking the world for our kids and our grandkids so that we can have a little more benefit today. That's really selfish, first of all. And so that's my biggest problem with that.
Yeah.
Second, you just can't grow. I mean, every normal person understands this. If you are a regular family and you have a crazy amount of debt, you are enslaved to that debt. If you are a company and you have a ton of debt, you are enslaved to that debt, and you can't grow like you want to because you are indebted, right, to the people who you're borrowing the money from. Now, I get the MMT people who talk about, but we're America. We're our own, you know, central bank. We create money at will, so it's not the same, and I totally get that. But what we're doing is we're exporting our inflation to these other countries. So again, getting back to the El Salvador announcement, all these poor developed nations that are on the US dollar standard and are dealing with our currency, they get a lot of our problems. So they go through these huge boom and bust cycles that are devastating to the people in these cultures, in these countries. So that's a huge problem. We just don't feel it as much here in the US because, you know, we tend to kind of export our problems, and while we're living large over here. I mean, again, it's just a matter of, is this really the best system to have for a group of people? Is this Keynesian, consumer-based, credit-based system really the way to go? I think most people intrinsically understand that no. In order to create value, you have to work hard. You have to create legitimate value for people. That advances society, and that makes the society as a whole worth more. And the whole credit-based system just doesn't work like that.
Yeah, and I think the key point with that I heard somebody phrase it this way. It's, you know, the government has the ability to create monetary units. They just don't have the ability to create value, right? And
Yeah,
so
perfect,
when they're creating monetary units, they are stealing value from existing monetary units, which if you're holding cash or if you're working at a job, your wages don't raise in the same rates, you know, you're poorer. You may not feel the effect of that instantly, but that is how it plays out. It's basic math. Okay, dude, that was awesome.
Real quick,
man.
so just a real quick, they're diluting their shareholders, right? Most people who invest in stocks and equities, they understand this. If you print more of the same thing that I'm already holding, you're diluting me. And so exactly to your point, that was really well stated.
No, 100%. And that is a good way to think about it. If you're holding dollars, you are a shareholder in the US, right? You're a shareholder in the value of the US economy.
Right.
That's a great example. Okay. So, one thing I wanted to touch on. So, I don't know if you saw what with BlackRock and what they've been doing, I think really recently. So obviously BlackRock is one of the biggest, what would be the right way to phrase it? I don't want to say just a fund, but they're like, how would you phrase what BlackRock is for people to understand?
Just like a big kind of an ETF firm, financial services company, I guess you
Yeah.
could label them as.
So yeah, so what they're doing, I don't know if you've seen this, but I mean, they have just been going insane, buying houses, 20% above asking price, just, I mean, sucking up houses as fast as they can. And, some people would say, well, like, it's free market, who cares? But it's not, right? Because the BlackRock is getting government money from the Fed. So they are using taxpayer dollars to outbid taxpayers, right, for homes, so that you're essentially swooping up homes in a market and almost forcing people inevitably to just be renters, right? And there's benefits to renting as well. I'm a renter, and I think that there's smart moves to make with that. But what do you think about if that continues, how that plays out? I think that's a really scary thing. I think they said that the most recent number was $120 trillion potentially worth of like home equity that they're in control of in the US.
Right. So if this were a free market economy and a free market situation, I would say I'm all for it. This is how the free market is supposed to work. If they have a surplus of capital, it's their right to buy whatever the heck they want to buy. But as you said, like we're talking about the Cantillon effect here, they are close to the source of the money printing. So they receive the most benefits from it. So they basically get first dibs. They're flush with cash. It's just burning a hole in their pockets. So what do? They do tons of things, but why not buy up all of the available real estate? The problem with that, and the problem with everything that the government touches, and I'm not anti-government philosophically, but I am against central control of markets, which always causes market distortion. And always benefits a small amount of people at the expense of the majority of people. So it's just doing the exact same thing, and it's increasing this whole income gap, the income inequality problem that we have here. It's making it worse. The markets are getting distorted. That jacks up prices. That makes it impossible for regular people to actually buy a house. So as you say, it forces them to become renters. They don't have the ownership benefit. Why does ownership matter? Because when you're in a monetary inflationary environment, all hard assets increase in price. So if you own assets, you just get richer and richer. I own my house. I've been watching the price, on Zillow. Every month it goes up. It's like, dang, it went up another 3%. Wow, it went up 5%. Wow, this month it went up 8%. I mean, that's insane. Houses should not do that. And that's just distortion in the monetary system. And then I think about poor, a 22-year-old who just got out of college and has a new job, entry-level job, maybe husband and wife, and they're both working. They can't afford this house because they're priced out of the market right now. The prices have gone up so much that they're forced to be renters whether they want to be or not. And that's just, it's not a true free market, and I hate it.
Yeah, no, it stops price discovery, right? Because when you don't, I mean, that's the whole beauty of free markets is things are able to figure themselves out organically. And if the prices of a home is too high, right, you should be able to build more homes and adding to the supply. That's bringing the prices down. But even now we're seeing, right, I mean, look at the price of lumber. Like it's been insane. And hopefully that's not a permanent thing. But I mean, the way it's looking at it just might be the new price for that. Okay, so there's a couple other things I wanted to chat with you on. One, so the IMF, right? Adam, did you see what they said about El Salvador? Did you see the statement that they issued? It was like IMF sees legal economic issues with El Salvador's Bitcoin move. So first question would be, what does the IMF do?
Nothing of value. I think they would say they're sort of the I think the best way to look at it is they're sort of the world's monetary police and parent. would be kind of a way to think about it. Like there's supposed to be a benevolent way to help out the nations in need from a monetary perspective. They're kind of keeping an eye on the entire world situation. But again, it depends on what your view of these groups are. I tend to be more skeptical, and I think they tend to, again, they pick winners and losers. And even though they're trying to do good, I think the consequences of their actions can tend to lead to more harm than not.
Yeah, I think what's his name? Ross Stevens. Did you read his shareholder letter that Michael
No.
Saylor? So it's great. I'll send you the link to it. It's like honestly
Yeah,
one of the best pieces on Bitcoin that I've ever seen, really. And he what he said about, like, even I think Jerome Powell was, if you put him on a lie detector test, like, I don't think he's trying to do bad, right? I don't think he's like maliciously doing things knowing there's the outcome, which obviously one side would go, well, if you and I know, right, and we're not in that position, like, you'd think that they know where that's leading, but their intentions probably aren't bad, but all that is irrelevant. And I think that too many people too often that aren't really up on monetary policy, government, really understanding what's going on with Bitcoin, they kind of view the government as just like this this nameless, faceless entity that like has good intentions and we'll figure it out. But people are involved, and when people are involved and they don't actually have to, let's say, run like a business where you have to provide a product that people want, you have to stay profitable, or else the market has spoken, you have no more business. If you're just allowed to keep floating around because you have free money, and then you continue to make the same mistakes over and over, like that leads in one direction. So that's great, man. I think I agree with you totally on how to view the IMF. One thing I wanted to bring up that's real interesting, if you had any thoughts on it. So one of the coolest things, right, is as Bitcoin adoption happens more and more with countries, right, is the ability for like Bitcoin mining to be able to channel stranded energy into things, right? Because there is a limit to how far we can transport energy, let's say from a volcano or a waterfall or whatever it is. You can only push that energy so far on a grid, and it loses the ability to actually, do what it's intended to do and provide energy for a city. Wanted to know your thoughts on maybe, let's say Bitcoin, we fast forward, Bitcoin's $500K, $1 million, several $1 million. What do you think governments are going to be able to do potentially if they are mining Bitcoin with that, and they're essentially profitable in doing so? And that could be, that's tax revenue in for the governments that they could then use for the people. Like, how could that shape, even the ability to like reduce taxes down the road because you're able to create money, from natural stranded energy? Do you have any thoughts on that?
Well, yeah. I mean, it's good. I think it's that the world's the financial world order is going to be completely reorganized in the next 10 to 20 years, and it's centered around Bitcoin and countries' responses to it. And this is a great example. So I mean, besides there's many different factors. One is if you can just get your citizens on some kind of Bitcoin standard, that's one thing. They can use it for monetary exchange of value. They can use it as a savings account. If governments do things like, as you mentioned, they're using their stranded energy, obviously that drastically improves energy efficiency.
Yeah.
That drives down energy costs. That improves standard of living all around the world. Depending on what country you're in, if they're doing that more, your standards of livings are going to increase that much more. And for people, if obviously there's so much FUD and so many false narratives. And Elizabeth Warren was just spewing, just lies and half truths all day yesterday. It just drove me nuts.
Yeah.
But again, trying to get people to hate Bitcoin because it wastes energy. And Greg Foss is probably the best one at this, saying, Bitcoin doesn't waste energy; it uses wasted energy or stranded energy. And so that actually improves energy efficiency. It's truly a free market, and that free market will continue to drive down costs lower and lower. It will drastically improve the energy grid, because as you say, there's the energy grids, and most people don't understand this, but it's very inefficient. A lot of times they make more energy than people are using at the moment, and they don't have a great way to store it. So basically they don't have great batteries to efficiently store the energy that they create. So tons of energy, I think it's 30% of the world's created energy just gets wasted every single year. And Bitcoin only uses a very small fraction of that wasted energy. And so the whole narrative is just ridiculous and stupid. Any country who embraces that, to your point, it's going to be highly beneficial, highly lucrative to those countries. So say El Salvador does this, their revenues are just going to go through the roof if Bitcoin keeps doing what we think it's going to do, and they're actually mining Bitcoin on their own. Yeah. So then why do you really need to extract money from your people and take taxes from them if you have a surplus in revenues? Of course not.
Right.
So and again, that's the new world order, is the first movers onto the Bitcoin standard. They're going to be the countries that are leading the way in 10 to 20 years.
It's the new world order that we actually want.
Right.
No, I mean, and so, and, you know, there's obviously a lot of people in the Bitcoin community who are libertarian, they're Republican, they're Democrat, whatever they kind of identify with. But I think one thing that anybody logical who's paying attention to what's going on has to acknowledge that's true is, look, people, you know, the climate change, global warming discussion in a macro way, that's a long discussion, and there's a lot to that. It's a very complicated thing. It's not as simple as, you know, do this or we all die in 10 years, like it's framed by some people. But I think the one thing that people can agree on is, or they should agree on, is it's being used as a weapon by governments to try to stop certain things and promote other things. And when that happens, you know, again, it's another way of picking winners and losers. And if you peel back on it, like you just did, I mean, and we could, if we went a bit deeper, the arguments just don't hold up, right? I mean, you look at the energy usage of Bitcoin and what is it? I think it was like slightly bigger than which country? It's like a very small country. And Michael Saylor's, I think, argument with it is like, you know, if Bitcoin's energy usage is, you know, slightly bigger than, you know, the 89th biggest country in the world, or whatever the number is, it's like, if that's protecting the world's literal monetary energy, I think that's a good use of energy, right? If we're going to use energy on all kinds of things, and then it doesn't even factor in, you know, all of the energies that will be reduced of the existing banking system that's consumed with that in its current state. So yeah, so I think it's been debunked, and that's why when Elon, you know, put that out, it was so disappointing, because it's like, man, like you're
Right.
one of the smartest people in the world, and probably the richest, and if I know that, you should know better. That's why it's disappointing. So, okay. So great. So super good insight on that. One thing I wanted to talk about to people, I don't think I've really talked about it on my channel, but it's one of the things that gave me, you know, some of the most excitement about Bitcoin. And you talked about it on the space the other day, which is retiring potentially on Bitcoin tax-free. And retiring is a loose word. Obviously doesn't mean, you know, you just want to do nothing, but how can people use their Bitcoin? Can you explain that strategy? Are you there? Did I lose you, Jeff? All right, guys. So we're back. We had a little technical difficulty, so sorry if that ended abruptly there for a second. But so I wanted you, Jeff, to kind of explain that strategy, right, of being able to, you know, borrow against your Bitcoin, and just how to think about that, because that was super eye-opening for me, and I think it will be for people who don't quite understand that that's possible. So wherever you want to take that,
Sure.
I guess.
Sure. So first of all, the whole concept of retirement, by the way, is going to fade away. I think that was sort of a post-war baby boomer, you know, go golfing for 30 years and then die kind of philosophy. And I think that the generations behind them don't have that same philosophy. So it'll be a little different. What I mean by retirement basically is financial independence. So you can do what you want when you want, because you have, you know, a stream of income or something like that supporting you. And you're no longer bogged down to a 9-to-5 day job for the rest of your life, kind of thing. So how do you become financially independent, and how do you get there? A large amount of
and we're back. Sorry.
So all right, yeah, having technical difficulties here, little internet issues. So how do you get to the point of financial independence? And I think borrowing a common mantra among wealthy individuals is a saying, buy, borrow, die. And so what does that mean? It means that you buy or acquire a large amount of a pristine asset. And in the past, that usually has been real estate or something similar to that, maybe antique cars and beautiful things that are, you know, collectibles that are worth a lot and tend to go up in value over time. And then what people do is borrow against that money instead of working and generating an income, which generates taxes. They just borrow off of the assets that they own. and then die. So we'll get into what that exactly means, and we'll frame it in terms of Bitcoin. So say you can save, you work hard, you save a lot of money, and you can actually acquire 1 Bitcoin. Okay, and say that by the year 2030, Bitcoin gets to be $1 million in value per Bitcoin. I think it's actually going to be more than that, but say that's what happens, and say that's what you own. So you have $1 million in Bitcoin. Against that, similar to how today we borrow against the equity in our homes, it's called a HELOC, or a home equity line of credit. I think in the future there's going to be very similar products considered like BLOCs, Bitcoin equity lines of credit. Exactly, that's my term, my coin. So we'll see if it catches on. So I think though that banks are going to increasingly recognize this as a legitimate asset, a legitimate store of value, and that it's here to stay. You can borrow against it at low rates. And so say you have $1 million, you have your 1 Bitcoin, you could borrow $100,000, pay just the interest on that. And say by then you pay about a 5% interest rate off of your $100,000. So so you could live for a year off of the $100,000, and all you would need to pay back is the interest. So 5% on $100,000 is about $5,000 over that year. That gives you another $95,000 just to live off of. At the end of 12 months, you just can do that again. So that's where it gets scary with most assets, because then you would have to double up on that. So you'd have to borrow $200,000 the next year. 100 of that would be to pay back the $100,000 you own, and then you'd get to keep the other, now, and then the math starts changing a little bit, because now you're paying interest on $200,000, so that's $10,000 a year. You'd have to pay $10,000. Okay, so the math is going to get a little jumbled, but why does that work? It works because you're never selling your asset. You're never selling your Bitcoin. That's sitting there, and at the rate we've been going so far, is Bitcoin has been doubling every year to every 6 months. So it's been going up 100 to 200% per year over the last 10 years. It depends people keep throwing out 200%, but it really depends on what day you're talking about and from what starting point you have into where we are today. So it's about 130 to 200% over the last 10 years. If your asset is increasing, even if it's 100% per year and you're only borrowing at 5% against that, you're basically keeping that spread in between by not selling your Bitcoin. So you can live off that. You can continue to accumulate debt. You pay no income taxes because you're not earning income. You're basically being your own bank. The only penalty you have is that whatever 5% interest payment. And then say you do that your whole life, your Bitcoin keeps growing, your debt keeps growing, but your debt is growing at a lower, slower level than your Bitcoin. So your Bitcoin is up here when you die, and what you owe is this much. When you die, you have your estate plan or whoever, your family member, pay off this debt with this asset. And then the rest of this Bitcoin asset, it's probably going to be like 0.9 Bitcoin, or what is that, 900 million Satoshis, or 90 million Satoshis, then that's what goes to your kids. And then they can do that same thing. And so that's the way you can sort of create generational wealth. Now, there are going to be taxes and regulations and things that are going to be developed over time. It's a very nascent system. We're very early. The government doesn't like money being passed on without getting at least a large piece of that pie. So they're going to create new tax rules, I'm sure. But that's just the way to think about it. And if you think about it that way, and this is how I do, you basically never have a reason to sell your Bitcoin, because Bitcoin is the apex asset. It's the very greatest asset, I believe, and you probably do too, Dallas, that you can actually own. So if you're ever selling it for anything, you're downgrading yourself. You could sell it for US dollars, but obviously US dollars are, terrible. They're melting in front of our eyes. Real estate, gold, stocks, commodities, whatever. Anything that you trade your Bitcoin for, you're getting a worse deal off of that. And so it really doesn't make sense to do that unless something drastically changes, which I can't anticipate what that would be. Unless something changes, you should just always hold your Bitcoin and never sell.
Yeah, and that's that's epic. So, and I think one of the other things that you mentioned when you laid this out the other day was what's kind of, and again, not financial advice, but what is a smart range to borrow against, right? As a percentage? I think your number, I think you said was like 10 to 20% is probably a smart move.
Yeah, so I would say be extremely conservative. And the reason being is because Bitcoin is still really volatile, right? I mean, I think it's going to be worth $100 trillion and more as a market cap 10 years from now, or even maybe sooner than that, 7, 8, 9 years from now. but until then, it's going to be very volatile. So you have to anticipate that it could drop as much as 80% still, or even possibly more. And
Yeah.
so the reason why I say don't borrow more than 20% against the amount of Bitcoin that you own is it's because the price of Bitcoin, say it does decline 80%, or more, say it drops 90%, you're going to get margin called, and they're going to take your Bitcoin from you. So you want to keep your borrowing levels extremely conservative. And the best way to do that is just to hold it, accumulate as much as you can for as long as you can. And then you will be able to very conservatively borrow against it and without worry of it getting called away from you.
Yeah, and even if you were to borrow against it, right, it's probably not a bad idea to keep even a little bit of the cash that you borrowed against it there in case there is some freak event. You can buy Bitcoin and add to your
Yep.
position so that it changes where you'd be liquidated at to be
Yep.
safe. But yeah, that's awesome, man. I mean, for me, that was just game changing because I think most people don't know that that's what the richest people have been doing for forever. Essentially, is holding the highest quality assets, never selling. They know that money keeps printing, and the money's going to find its way into the value of those pristine assets, and then just borrowing against it, right? I think everybody is out there in the streets with signs like, what? Why does Warren Buffett's secretary pay less than him?
Exactly.
It's like, because he's taking advantage of these rules, and people can say the rules are good or bad or whatever in between, but all that is irrelevant. The rules are the rules,
Right.
and you need to play them to be in the best position for yourself. So that's awesome, man. Super exciting. Okay, so always fun. I know at the top of the video you did mention, I think in this cycle you said you think Bitcoin maybe around like 300,000 to 400,000, something like that. I don't want to misquote you on that.
Yeah, 400,000 to 500,000 is my target.
Okay, love that. So if that is, okay, so the next question would be, when do you see this cycle ending, right? And then I want to maybe go a little further out past that date of, kind of the next prediction of where you think Bitcoin may get to so that people kind of understand where all this is going.
Sure. So there's a lot of debate out there about are we ever going to hit the super cycle, or are we going to continue to have these basically every 4-year cycles? I think we'll continue to see the 4-year cycles at least through this cycle and possibly through 1 or 2 more.
Mm-hmm.
So that's how I look at it. The way I'm kind of envisioning all of this is that we do have a blow off top. That's why, by the way, I don't think we've officially topped and that this bull market still has a lot of room to run.
Okay.
We didn't have any kind of blow off top. Things got kind of exciting when they went from 40, 50 up to 60 some $1,000. And then they kind of rolled over and crashed down to 30,000 or so. That is not what a blow off top looks like. That's not a manic top. That's, your grandma's not calling you and asking how she gets into Bitcoin, that kind of stuff. Those are signs of the top. We didn't have any signs like that. And the markers that I was looking at is all the on-chain analytics were starting to get overheated. And so I was actually hoping for a pullback. Now, admittedly, I didn't think we'd get a greater than 50% pullback. That was pretty painful. But it is what it is. And it really reset things nicely. And so I do think that really everything is perfectly set and established now, where the weak hands, the short-term traders all got flushed out, all the leverage got flushed out. So the shorts piled on, and then just in the last day or two, they're starting to get wrecked as we ramp higher. The shorts are getting squeezed, which is great.
Mm-hmm.
We're in a great spot technically, on-chain analytics wise, macro wise, and just kind of news wise. I mean, El Salvador, that news and the fact that countries are starting to establish a Bitcoin standard or trying to push down that road, those are all very good signs that we have a lot of room to run. So yes, I think we have a big cycle. My time frame is still kind of similar to the previous ones, where I think by the end of 2021, we get to the 400 to 500 range. We might blow past it, honestly. I wouldn't be surprised if we start to approach a million, only because that would put us at parity with gold. It would put us in the kind of the $10 trillion market cap range. But then I think, so if that does happen, and I hope it does, I would start to get very cautious up here. If we do that parabolic move higher, that's at least within my hedge fund. And for my clients, I start hedging against it, hedging against a large drop down after that, because then when you have those blow up tops, you have to have a correction at some point just to kind of reset the whole market.
And how do you, when you do that hedge, how do you do that for people who want to understand how to execute that? How do you do it?
Yeah, so the easiest way to hedge isn't really hedging, is honestly just sell and take some profits and sit in cash and move
Okay.
it over. So that's sort of a poor man's hedge. If you're more sophisticated and you have brokerage accounts to do stuff with, you can short things or you can buy puts on things. And they're both kind of the same thing. They're both a way to profit if the price goes down. What I like to do is I use Bitcoin proxies for that. So things that tend to go up and go up even more if the price of Bitcoin increases. And then they tend to, if Bitcoin goes down in price, they tend to go down harder and faster. So they're sort of a leveraged way to play Bitcoin. So one easy way, and I hate to do this because I love Michael Saylor, but MicroStrategy is a good thing to short because that stock basically just trades in tandem with Bitcoin now at this point. And it's not even really a leveraged way anymore. It's just basically a Bitcoin ETF for all intents and purposes. That's an easy way to do it. Other things are like Bitcoin miners. Again, I love my Bitcoin miners, but they get hit harder than Bitcoin does when the price goes down, just like they go up more when the price goes up. So because it's a leveraged way to play it, you can buy smaller positions. So buy puts on smaller positions or short smaller positions. And those tend to go down further and faster than the actual price of Bitcoin does. So if you want to just hang on to the Bitcoin you own, but hedge against that downside risk, those are some easy ways to do it. You know, Coinbase is out now. That will also trade in sympathy with the price of Bitcoin and the crypto market in general. So you could short Coinbase, and I'd kind of have fun doing it because of their heavy altcoin exposure.
Yeah.
So anyways, there's lots of ways to do it, but I think it's pretty wise, especially if we do get that parabolic rise in price and we do go 400, 500,000, close to a million.
Yeah.
I would get cautious at that point, at least in the short term.
Amazing, man. Super insightful, dude. Thanks for coming on, man. Like, I mean, I think people who watch this should get a tremendous amount of value out of this. So I'm going to have a hard time thinking of the title for this video to make it worth the content. So, okay. So I'll obviously put, links for, at least whatever, I know your Twitter, what are great ways for people to learn about, more about you, connect with you and what you're doing? What would be the best place for people?
Sure. So I'm most active on Twitter. My handle is at Vailshire Cap. And then if you want to learn more about what I'm doing at Vailshire, it's just vailshire.com. That's VAILSHIRE.com. Those are probably the two best ways to do it. And honestly, I'm pretty wide open. So if you want to just DM me or email me, I'm happy to entertain any thoughts and any concerns or questions. I love talking about all of this stuff. Obviously, I get a little fanatical about it, but it's a good time. But I appreciate you having me on, Dallas. This is a good time.
Of course, man, dude. I mean, as you know, the market sometimes, a week in crypto is like a month in the real world outside of crypto. So I'm sure I got to have you on again soon so we can talk about all the new things that are progressing as things happen. So thanks for coming on, man. For anybody watching who's still on now, the like button, subscribe, comment what you learned in the video, and be on the lookout for more stuff coming soon. Thanks, Jeff.
Sounds great. Thanks, Dallas.
Appreciate it.